Hey everybody, welcome back to another beautiful day in real estate. Today we're going to go over a few things. We're going to talk about the war in Iran. We're going to talk about oil prices. We're going to talk about the spring market, and then we're going to get off because we are starting a little late. We did a video earlier today. I kind of didn't like the way it turned out. It was just very tangenty. It just felt like we weren't providing any information or value. So we wanted to redo it. Anyway, so interest rates, you guys, 6.4%. Nothing really moved as of yesterday, but I'll tell you what really did move today, and that is oil prices. Oh my gosh, dude. We talked about this yesterday, right? We talked about the high over here on the daily chart for the RSI, and then we saw the lower high. We kind of anticipated heading south. Not only that, but we also saw a trend line where it basically bounced off our peak of 115. So we have a double top now. And then it headed south 20%, right? Ooh, that's not good. All right, let's just not do that today. But anyways, this was kind of the big expectation. I thought we were going to see 101. No, it broke right through that, and we're on our way down. We're at 93, finding support right down at the second support zone. If it goes below this, man, we could be heading farther south. I would say close to 78 a barrel, but reason this happened is because we saw the war in Iran ceasefire, which came out last night about 2 hours before the deadline that was apparently supposed to demolish all of Iran, right? And we can all agree that that's probably, or maybe not all of us, but we can probably agree that that was a bunch of BS and that it was just another threat hurled at the country. It is what it is, all right? But we're going to talk about something else next, which is going to be what happens when oil prices go down, so do bond prices, right? Now, bond prices dropped, and we talked about this again yesterday, right? It kind of, from the stochastic, and then we saw the stochastic RSI, with a high, lower high, right? And then we saw it move downward. Same thing with the RSI, high, lower high, south, right? And then we saw the trend line bounce off. I'm not a trader. I'm not going to try and explain all that stuff to you, but it did make sense, right? So from the peak of yesterday, 4.38, all the way down to the trough this morning, 4.22. We talked about that, right? Support is right here at 4.27-ish, right? It could be give or take a little bit. We saw the gap on open this morning, which means things moved quickly. So when you see gaps like this in the stock market, it means that there was so much sell pressure that at the beginning of the market, but in this case, it would be buy pressure. Sorry. So much buy pressure at the beginning of the market, it actually tanked. But in most cases, when you see a gap like this on open, you're typically going to see, you're going to kind of see a recovery. And that's why we're kind of seeing, I call it Thor's hammer, but this right here just shows that we're probably, depending on where it closes today, but as of right now, if it closes like this, we're heading back north and we're probably going to be up to that 4.44 range again. But the gap between the 10-year Treasury bond and the 30-year fixed rate for conventional is about 219 basis points, so 2.9%, a little bit higher than yesterday, which was 2.12. My guess is we're probably going to see interest rates go south. And when I say south, they're probably going to move towards a positive direction. And this is optimistic, right? This is what I like to see, especially right after Easter weekend. So those that are in real estate know that right after Easter weekend, especially in states that aren't like Florida and Texas and Arizona, the warm states, right? Sunbelt states, typically this is when the market starts to move again, right? Because everybody is, January, December is all Christmas. It's wintertime. Everybody's spending all their money. February is kind of that recoup month where everybody's kind of building their savings back up again, paying off their credit cards. It's one of the coldest months of the year for North Dakota. March, everyone starts to open their eyes and kind of get back into the swing of things. You're starting to see more saves on Zillow. You're starting to see more showings pop up. Easter happens, and then right after Easter, the market gets really warm. It gets warm outside. I mean, we're supposed to be in the 50s basically all week this week, which I know some people are going to say that's crazy. That's cold. But for us, dude, that's swimming weather. So everybody's starting to heat up a little bit. Our open houses are freaking bumping. Want to know why? Because we priced our houses correctly. That's a little bit of a shot at some realtors. But right now, you guys, I'm telling people more than ever, it is so important to have your houses priced at the right point because right now, we talked to a seller of mine. We were going to drop the price, but our open houses have been bumping the last few days. That means, or weekends. So that means we're not going to lower the price just yet. We're not getting an offer, but we're getting a lot of traction, a lot of views, and a lot of positive feedback. And like I told her, you are living in a golf neighborhood, a golf development. I shouldn't say development, but a golf neighborhood, right? Right on the golf course. We're not in golf season yet. We're in spring, and it's starting to warm up. We had, even though it snowed 6 to 8 inches, we saw traction on the house this last weekend on Easter weekend. It was Easter weekend. We got 6 inches of snow the night before, and we still had open houses that were bumping from the time they opened to the time that they shut. That is good news, right? That means that people are starting to get out. They're starting to get excited, right? The feedback on the home was great. Again, realtors, this is why I say it's so important to really understand how the market works for you, right? Really pay attention to how your market operates. When you're listing a home, it doesn't matter if it's a 50,000, person community or a million people in the community. Understand the neighborhood you're in. North Dakota is a little bit more of a gap, but anyways, I'm not going to get too sidetracked on that, but my optimism is rising pretty significantly. We had 4 solid people pop into building this week. People are ready to move. And then I saw this morning. Home buying boost. Newly pending home listings are surging as spring shopping season kicks off. The U.S. housing market accelerated in March despite elevated mortgage rates, with the number of listings hitting the second largest monthly total since the end of the pandemic boom. Again, you guys, optimism right here, okay? It's mortgage payments ticked up 1.5%, right? Which from February, not a surprise. Okay, let's talk about this. We're moving into the spring market, right? People are getting excited. This ceasefire in Iran, oil prices tanked. I really would like to say they're going to stay there. I don't think so. I don't think we're at the end of this train, but bond prices are going down. What do mortgage rates typically follow? The 10-year treasury bond. So now we're seeing those move south, which means we're probably going to see mortgage rates start to come down. And what better time than right as the market's starting to heat up? People are listing their houses. We're moving back into a normal market after the first time for one of the first years since the beginning of the pandemic. Pandemic shot everything up, and then we saw interest rates spike following, and then we saw the housing market kind of teeter down. But what people were waiting for is they were like, oh, home prices spiked up, they're going to crash. They're not. I'm sorry, but they're just not, man. The inventory right now is still short. Some metropolitan areas are over gap. There's a average of 630 sellers over buyers. Yeah, I know. I've seen the data. I'm sorry, but that's certain places. That's not across the United States. That's the problem with data, right? It depends on where you pull it. North Dakota, Bismarck saw a 6.6% increase year to date on valuations of homes. So in the time when interest rates were typically the highest, or at least close to the highest, we saw a 6% increase in homes on average. Granted, again, it's average data. If we're talking about across the United States, we're talking about California, we're talking about New York, we're talking about Florida, we're talking about Arizona, we're talking about Texas. We're bringing all of those major metropolitan areas into that data. And right now, it's very hard to live in those places. It's very hard to buy homes in those places. So yes, you're going to see a big gap. But if you're in places like North Dakota, where the economy's strong, there's buyers, we're still seeing a lot of significant movement. And I saw a realtor did a TikTok video the other day locally. 18 showings in one day, over the weekend, 3 offers written, 2 inspections, blah, 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 blah. People are still buying, dude. People are getting comfortable with the 6% interest rates. And I saw a chart the other day, and I go like this because it was a cross, but the amount of people that have 3% interest rates versus the amount of people that are starting to have 6% interest rates, more people have 6% than 3% now. The shift is slowly happening, right? But right now is still a good time. Builders are still offering incentives. Mortgage officers and mortgage lenders are offering incentives to get into a home. I know my lender's offering $2,000. Well, one of my lenders, I should say, he's offering $2,000 towards closing costs. If you work with the builder, you get $2,000 off your closing costs. Plus, you get the 3% towards closing costs, or you get 3-2-1 buy down, or whatever the case is, right? So now is the time to be buying a house. I'm going to be adamant about it. I'm going to tell you about it. I'm going to share it with you everywhere across the scream it from the rooftops. Now's the time to buy a house. Get into the market now, because again, if we see interest rates come down this year with Kevin Warsh at May 15th, by the way, is our turn date for that. Turn date, if he makes it past the Senate and gets approved, et cetera, just like, RFK had to and all that stuff. We get in, Kevin Warsh steps in. He's going to be pushing for a different economy. It's going to be different than what we're talking about, right? All that being said, I still am optimistic. We have midterms coming up this fall. They need to do something with the housing market in order to keep the seats. They have somebody coming in who is now supposedly going to be aligning with the administration, bringing interest rates down. If we see that, I think we're going to see the opposite of what housing prices people are anticipating. They're saying it's going to crash, but we still have 4 million homes on the MLS, the lowest it's been since the end of 2008. People want to compare? Let's compare. I'm sorry, it wasn't on the lowest of 2008. I'm sorry. It's the lowest it's been since 1995. I think that was the date that I was thinking of, 1995. there's not a lot of homes on the market, dude. Yes, things are still unaffordable right now, but people, we want to keep pulling data. But again, we'll talk a little bit. We got two more things we're going to show you, and then we'll get out of here for the day. First off, tens back in the bowl and spreads getting to a tad better can get you sub 6% on 15 easy. It might even happen tomorrow. Mid fives, near closer to 4%. Granted, this is the 15-year, but interest rates are going south, you guys. That's the optimism I have in this market for the beginning of the year. They're going south, man. It's just taking time, and everybody's waiting for the crash. But guess what? As this stuff changes, what's going to happen? Housing prices are going to go back up because buyer demand is going to go back up. The incentives are going to go away from the builder. The incentives are going to go away from the lender, and people are going to gladly pay 5% more for a house because they feel like they're getting a deal because they have a better interest rate. I'm going to tell you every time, the interest rate is not why you're not buying a home right now. The interest rate is a factor, but it's not the only factor. You need to sit down with somebody who can guide you through that process, who can help you out, who can show you there are options out there, right? The whole point of me creating this channel was to showcase the data and give you guys my opinion on what's happening in the housing market. Well, also a few other economic perspectives, but also tell you and show you, like, guys, you have an opportunity to grow here. You have an opportunity to get into wealth. It's time, okay? But anyway, so what happened today? Let's recap. The Strait of Hormuz opens up. Iran's asking for fees paid in Bitcoin. They're asking for $1 per barrel. But there's a ceasefire for two weeks, which means that oil prices crashed, which means 10-year treasury bonds went down, which means interest rates are probably going to be heading south at the end of this week, moving into the busier part of the year. You guys, now's the time. Get ready. Have fun. Real estate's on the verge of moving again. And you're just sitting along waiting because you see all the bad headlines. It's time to get prepared. We'll see you soon.